Now, at SSE we have a clearly defined core purpose to provide the energy customers need in a reliable and sustainable way, and as part of that we clearly need customers and shareholders in order to do that effectively. Going into winter, it's clearly not what we wanted to do. However, having sustained a loss in excess of £100 million in the first 6 months of this year, that's not sustainable for us as a business. It's not sustainable in the long term for us to be able to invest in assets and indeed to look after our customers in the way we've done so. So we've had to put that price increase in, but we remain committed to looking after customers, and if anybody is out there making difficult choices between heating their homes and eating and other things, we remain there to help them. They can call us on one of our free phone numbers and receive help. There's an awful lot that we can do and a lot of other agencies that we can draw on around benefits health checks, energy efficiency measures, payment plans and things of that nature to make sure that we help people with their bills and we make sure that they stay warm this winter. Well, SSE change is actually what we're all about, and therefore reform and reforming the energy markets is something that we're clearly committed to. We were the first to end cold calling earlier this year. We've got a unique customer service and customer sales guarantee, and going forward when you look at discussions about reintroducing something like a pool, that's something we're very open to. Currently trade all our electricity through a market on a day ahead basis. Also on things like business separation. We currently have business separation for our networks businesses, so achieving something similar between generation and supply to back up what we already do through the regulatory accounts that show separate numbers for those businesses would be something that would be very interested in talking to government and regulators about, so we increase transparency and trust in the market by building more and more consumer confidence. So the reform agenda is absolutely where we are, and we need to make sure that we're doing things substantively to demonstrate how transparent, upfront and honest we are, and actually help change customers' perceptions.
It's been a difficult 6 months. Profit before tax was down 11.7%. We had a good performance in the networks business. That was up around 14%, reflecting significant investment in that business over the first 6 months. In wholesale, energy portfolio management and generation were down, but we had a good performance in our gas production, which was up a significant percentage, up over 300%, based on acquiring the Sean field. And then in retail, we were down significantly, particularly impacted by the 115 million loss in energy supply. Our investment programme in the first 6 months, we're up around 100 million compared to the first 6 months last year, at £804 million. Roughly about 45% of that related to the networks business, so that was about 350 million. That included our investment in Phillips-Davies, where we spent over £100 million. In generation, renewables, we spent over £200 million on investing in mainly in onshore wind farms. Kariaka was commissioned 32 megawatts, and we continue to invest in our Keadby wind farm, which is over 60 megawatts. And then in thermal generation, we invested around about £150 million during the period. A big proportion of that, about £50 million, related to the Great Island CCGT plant, which is progressing well. So SSE has continued to invest significantly. That equates to around £4.4 million a day, investing for SSE, our shareholders, and for the infrastructure of GB and Ireland. Well, shareholders own the company. SSE has got a big investment programme. We need to attract capital, and in attracting capital we have to pay dividends and we have to grow dividends. As you invest in infrastructure, you expect to make a profit, and some of that profit is then redistributed to shareholders in the form of a dividend.